Hey, good morning, everybody. It's Hammer. Today is Tuesday, June 17th, 2025. I, of course, am your Rate Sensei on the Rate Sensei Show. I don't know if that has a ring yet. I'm going to have to play with it. But anyway, we're here to help you be in the know, knowledgeable, all that good stuff so that you can sound like the guru to your clients. Here to make y'all look like rock stars, fill you in on what's going on with mortgage rates and pricing and why it's happening. Today, we're going to talk about some Senate changes to the big bloated bill. Trump's mega bill, why that matters. It matters because they're looking to get that out by July 4th and the effect that will have on mortgage rates. It'll actually have more of an effect on mortgage rates than some other things. So we're going to talk about some of those changes that the Senate is proposing. We're also going to talk about Nikki T, the Fed whisperer, and he appears to be trying to tip the hand of the Fed for tomorrow. And we'll talk about anything else you guys want to talk about. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time. If you're here this morning, say good morning. We got Mallory Fotiadas here, Deb Dickinson, Angela Walters. Good morning, all. If you're here this morning, say good morning. I want to hear from you. Cindy Pulliam, good morning. If you guys are watching the replay, don't forget, give me a hashtag replay in the comments. Let me know that you were here. Don't forget, you can smash that like button, tag an LO friend, share this post in a group. If you would like a text message reminder that I am going live, I send one out each morning. If you don't want to depend on Facebook or YouTube notifying you that I'm here, you can sign up at hmmr.io/reminder or this cool QR code over here. You can go ahead and sign up there. If you're on your phone right now, take a screenshot, go back to your photos. That QR code will work. And it's a text message each morning. We don't sell it. We don't sell your info or do any marketing to you. I just got one about being recruited by Target of all places. You're not going to get any of that crap because of me, I promise. And if you want to unsubscribe at any time, you just reply stop and it'll unsubscribe to you. Good morning, Mr. Ron Siegel. Today is National Apple Strudel Day, according to Ron. I can get behind that one. Who else likes some apple strudel? Let me know in the comments. Curious what y'all like. Randy says, giddy up. YouTube says video isn't available. Must be some tech issues this morning, Randy. Thanks for letting me know. I see Amy Blauser on YouTube, though. Cindy Pulliam's on YouTube. Angela Walters is on YouTube. So I don't know, but looks like something. We'll see if it's an issue. My number of people watching is a little bit lower this morning, so it might very well be an issue. I only see 2 people on the YouTube channel. So we will see. We will see. Good morning, Robert Bashir. It's great to have you here. And Charlie Bedita, good to see you, my man. So, all right. Well, I'm going to go ahead and jump in and we're going to see what the day brings, whether it's working or not, because I can't really fix anything from here. Remember, while I am chatting, do me a favor. Give me your feelings, opinions, comments, questions. The more you comment, the more it helps the engagement on the videos, and that helps us to grow. Plus, I always like to hear from you. So you guys know that my man Ron Siegel will always put out some good information, some comments. I know some of the rest of y'all do as well. So let us know. Let's go ahead and jump in and get started. I'm going to start off with a screen share here. And let's go ahead and I'm going to do a side-by-side for you. Quick recap of what happened yesterday. I'm going to give that to you in starting out in the Presentify. Let's make sure that's open. Okay, I'll start off with you here. Basically, this is the wrap-up text on what happened yesterday. Remember, you can sign up for our text alerts at www.ratetextalert.com. We send out a morning alert if there is concern about if there's concern that we're going to see reprices, we will send out an alert during the day, and then we send out our wrap up at the end of the day. So yesterday's wrap up, bonds improved in the morning, but gave up the gains through the afternoon. Nothing to panic over. But if we don't see a positive start for bonds tomorrow, and if retail sales data comes in weak, it could help. We will see slightly worse pricing. Fed meeting not expected to help rates much, but no one ever really knows. Iran is waving the white flag, and that could help ease some inflation concerns. So let's take a look and see how that played out this morning and where we are at, and we'll go a little bit deeper into the checkout for where things were. Figures, this was working. There we go. Now we got it. So take a look here. Let me make this a little bit bigger so you guys can, there you go. So yesterday you could see everything in front of the dotted line here. This was yesterday. Pricing comes out right around here in this window. And you saw that mortgage bonds were actually improving on the day. They were increasing as that happened. It kind of hit a peak in the late morning, but through the afternoon, early afternoon, gave up a lot of those gains. There weren't really any reprices worse here because most lenders came out with pricing within that same window. I got lots of things going on here. So you could see kind of this window here, and we got to that same low point. So there wasn't really any concern about repricing worse. We ended the day a little bit lower than where most lenders came out with pricing. That's why you see this dip this way right here. And that's why we would have seen things worse. Now this morning, we see this nice big jump up right here. We ended the day down here, but we began the day up here. This increase actually puts us kind of right in that same realm of where pricing was here the day before. We improved the where's 830? Let's see, 829, 830. So we were at 99.09 and actually just kind of stayed steady and lost a little bit of ground for that half hour after. You can see right here, that's when retail sales came out. Now, retail sales did come out. Got a lot of things open here, so let me find it for you. All right, so retail sales dropped more than expected in May, weighed down. Hold on, let's move this over a little bit so you guys can see. There you go. Weighed down by a decline in motor vehicle purchases. Remember, with the tariffs hitting in April, we saw auto sales jump before that, February, March. A lot of vehicle purchases because people were buying ahead of the tariffs, concerned about what effect that would have. And now we've seen that decline in motor vehicles. It's kind of the hangover after seeing everything getting bought. So not something to be overly concerned about. And traders also know that, but it is going to show up in the numbers. Consumer spending remained supported by solid wage growth is the important part. So retail sales fell 0.9%. They were expected to be down 0.7%. So it wasn't that far off of what was expected anyway. Estimated ranges, blah, blah, blah. President Donald Trump's, not now. Oops. There we go. President Donald Trump's sweeping tariffs have raised fears over global growth, restraining oil prices. But hostilities between Israel and Iran have boosted oil prices. Unseasonably cooler weather likely also hurt sales. That was earlier on. Now, as it comes to Iran and Israel, a lot of talk that Israel is waving the white flag. Iran. We've got to clear that up. Iran is waving the white flag. And that they are looking for, help after basically saying, no, forget the discussions that were scheduled for Sunday. They didn't want to have them. Now they're saying, okay, we're looking for some help to get this done. There was some concern that we would see the U.S. get more directly involved after Trump advised Iran to clear out Tehran. But the reason that I saw Trump advising them to clear out Tehran is because Israel said to clear out Tehran because Israel said they were going to attack there. So they're kind of pointing out that they're already doing that. They don't want to necessarily hurt the population and the populace and the average person, civilians. They're not really looking for that, but that's of course some of the things going to happen. So anyway, and I'll come back to your comment, Ron, on that one. So taking a look here with what we got this morning, it should be a calm, quiet day. Rates should be very similar to what we saw yesterday. Taking a look at mortgage-backed security, at rate sheet pricing. We were last week our best levels. Friday, this is Friday, was 6.89. Monday was a little bit worse, 6.91. Today should be very similar to that, maybe a little bit better, maybe a little closer to Fridays. If we take a look and see where were bonds, where did they close on Friday? They were at Friday 99.04. Right now we're at 99.02. So we're up about 10 basis points. That generally coordinating to your rate sheet pricing should be right around that same level, maybe a hair better than yesterday, similar to yesterday at the worst. So shouldn't see much of a move there. Like I said, rate sheets this morning could be benefiting my opinion on why we're seeing the increase in overnight trading, why rate sheets are benefiting this morning, why we're seeing this right here. I think that basically that markets are looking at the fact that Iran is starting to wave the white flag, and they are ready to go ahead and that'll help oil prices. Some of the concerns there that there won't be the Strait of Hormuz and things going on over there. So reprice risk today is low. Generally, we don't see much movement ahead of the Fed meeting. Expectations for Fed rate cuts tomorrow currently almost zero, as close to zero as you can get at 99.9%, as close to zero, but not being zero, right? 99.9% expectation that we won't see any move. As far as where markets believe will be at the end of the year, one rate cut, about a 27% expectation. Two or more rate cuts, we got 41% for one rate cut, another 22% for this would be 1, 2, 3. So 3 rate cuts, 3, 2, 1. This is 0. This one's 4, but that's very unrealistic because we would have to start next month. So the markets are a little bit pricing in the idea. We'll see that change tomorrow. Which one of these columns is going to go up or will, or down, right? So this one could drop, and I think this will go up tomorrow, is what I think is going to happen. Expectations that we will have rate cuts by the end of the year. Market's still, generally pricing in the idea that we'll have 2 is the overwhelming favorite and will likely continue to be so. Nick Tamaros, let's go ahead and jump into what Nick had to say. Again, tomorrow, it's going to be a bit of a unique situation because we're very likely to see mortgage bonds bounce around during the Fed policy statement, and especially during Fed Chair Jerome Powell's press conference. Generally, the policy statement comes out at 2, and his press conference starts at 2:30, and things settle down by 3:15 p.m. Eastern time. So we'll see if that's kind of the pattern that we get. And then what's going to be slightly different is we're going into Juneteenth, so markets will be closed on Thursday. It's the first time that I can remember that we've ever had a Fed meeting that ends on a Wednesday, or the Fed meeting ends at all, and the day after is a holiday. So usually you don't have Fed meetings on a Friday or anything like that. That's why they're in the middle of the week. So it's going to be a little bit weird that this one has Juneteenth right behind it, but we will see. We will see. Overall, though, I mean, you take a look at the 10-year Treasury yield, 4.43 at the moment. Oops, I didn't want to move that. I was trying to do this. 4.43 at the moment. Not a huge change, very much right here within that range of what we've grown used to. We've got some resistance with the 50-day moving average. We have resistance with the 100-day moving average. We have support with the 25-day moving average. Remember, for yields, when yields go up, that's actually bad. We want to see yields drop down. It's the opposite of what we want to see happen with mortgage bonds. Mortgage bonds, we want these guys to go up, and for yields, we want those to go down like this. So that's what we're kind of waiting on to see there. So Mike Morano said September 16th and December 9th. So yeah, we're going to get the Fed dot plot, and I don't think we'll see any real changes. I think they'll still forecast 2 cuts this year. So Tamaros in his article, basically, the key points here, the Federal Reserve is likely to hold steady on interest rates. We already knew that, right? Due to tariff-related inflation risks, despite recent mild inflation readings. The thing is, will markets expect the Fed to start taking action soon? We have not seen inflation hitting the way we expect it to. There is expectations of inflation from the consumer side as well. Inflation expectations, crucial for the Fed, are tricky to measure but influence actual inflation. Recent data presents a mixed outlook. This one talks here about, forgive me, I'm not getting full breaths here. Inflation expectations are what consumers and businesses think inflation will be in the future, can't be seen or touched. Researchers conduct surveys or infer them from investors' bets on future inflation. The thinking goes like this. If retailers expect their costs to be higher tomorrow, they will raise prices today to get ahead of it. Landlords will do the same, but they didn't, right? I mean, we've already talked about that. We've talked about it in the past. There's been plenty of articles referencing that Target and Walmart, that they were actually trying to maintain their pricing and make it through the tariffs, because the expectations, which proved to be true, were the tariffs were ridiculously high and have come down. I think that there is some extra profit on the table after seeing the inflation that we have post COVID. And I think companies are aware of the fact that there is a lot of consumer fatigue and that consumers are running out of money. So that's kind of, I don't know that I necessarily agree with this. What do you guys think? Let me know in the comments. Do you think that retailers are expecting their costs to be higher tomorrow and they're getting in ahead of it? I don't think that's the case. I think their costs are already higher, so that would have happened already. Landlords will do the same with rents. Again, argument being, I don't know that they can. There's a lot of fatigue. There's definitely a fine line right now. We're seeing sellers, we're seeing inventory set on the market. We're seeing more inventory than usual. We know there's a hangover going on right here. So keep that in mind. Mike, as far as when are the rate cuts expected, let's take a look and see. According to CME Group, yes, the first one would be right here, and that is in September. If we take a look at July, the July expectation is that we would still be at 4.25. So the first one would be September, and then if you look at October, that also expects to stay at that first one. Again, just one rate cut there, still the overwhelming majority. A little bit over here, 30%, but by December, expectations are the 2 cuts. So right now, we're basically seeing September and December are what markets are pricing and when they think they will see the rate cuts and what they're going to look like. So keep that in mind. Dave Zelinki, I see lots of sales at stores. Yeah, but sales are more of a marketing thing than an actual dollars and cents thing. Like, for example, I just bought a Mighty Vac to bleed my brakes on the bike. And I was watching a YouTube video from a few years ago, and it talked about how it was $35. And I've seen them from $50 to $60 now. So, that's kind of where they're at. Mike said, no, it's credit maxed out now. Yeah, I've talked about that before, my friend, and I think you've got it nailed. HELOC and cash out apps, calls, inquiries busier than purchases. Yeah, we've talked about it. We knew it was coming. People are hitting their limits, and you got to get out there, and there is going to be refi business to free up cash flow. Ron says the SLR regulatory changes will have more of an impact on mortgage rates than the Fed will this year. I would agree with that. When you say SLR regulatory changes, what is SLR? I'm not familiar. You know me. I'm always upfront. If I don't know what I'm talking about, I tell you I don't know. I don't know what it is you're referencing there. And where would I find out more about that? Is that something Logan's talked about, or who's chatting about that one? But yeah, the as far as the Fed and the effect on mortgage rates, it'll be the normal. If markets are currently pricing in 2 cuts, but you'll see movement in pricing based on that. We're not going to see any big moves from the Fed tomorrow. So that puts us in the lock advice. Let's go ahead and throw that up on the screen since we're talking about it at the same time. Expectations, I would be cautiously floating everything. I would wait and see. Only the most absolute risk averse, and rate sensitive near-term closings would even consider, locking up today. Again, I don't think we'll have to worry about it, though. Should be a calm day. We may lose a little bit of these pricing gains, but not enough. Oh, Basent talking about this in banking. Statutory liquidity ratio. Okay, I'm going to have to Google that. I'll look up a little bit more about that so I can be more knowledgeable on that. Thank you. And but as far as where we're at right now, I would be floating. Let's see what tomorrow brings. One of the things I love about the Fed meeting is the fact that we do get to go ahead and float into the meeting, see where that takes us. And tomorrow is no exception. So what will be an exception is Thursday. Now, I know most of you will be working on Thursday. To me, I think Juneteenth ranks equivalent to like a Columbus Day type holiday. It's not exactly a Memorial Day, a Labor Day, or a Christmas type holiday where everybody really does take off. It tends to be one of the ones that the banks will be closed, but a lot of us will still be at work. I'll be working on Juneteenth. My staff will be working on Juneteenth. So again, it's more of a politically charged holiday because it's a little bit newer and it has racial overtones to it. But the reality is just that it's more of a Hallmark holiday to us. Columbus Day, that one, Groundhog Day. They're really not a big one, so not one that we really do. So. We will see. I would love to see if the 10-year did go down into the threes. That would absolutely help mortgage rates. Am I doing a show on Juneteenth? Yeah, I'll be here. No reason not to. It's a normal work day for us. So I know markets will be closed, but I'll probably still do a show because we'll talk about what happened from the Fed. So it'll still be fresh and then we'll talk about it. So yeah, I will be doing a show on Juneteenth. All right, my friends, I'm going to wrap it up. Y'all have a fantastic day. Thank you so much for joining me. Appreciate you all and get out there and get some business. I'll catch you later.